Good day, traders everywhere. Adam Hewison here in the digital studios of MarketClub with your midday market report for Monday, the 3rd of June. Well, last week we ended on a very sad note for the markets, but something's pretty interesting what's going on with one of the indices right now. I want to share that with you. Here we are. We're starting off the month of June, and is the bull market going to continue or is it going to roll over? So let's go right to our portfolio. And we'll be covering a special stock today. It had a big jump, and you may want to be looking at this for your portfolio too. So let's go right to the updates for Monday, the 3rd of June. First thing I'm going to look at are the three indices, and look what's happening. See the yellow around the red down weekly triangle, both on the NASDAQ and also on the S&P. That's an indication you should be out of this market as of today. You should be out of this market now. What's standing out is you haven't seen that with the Dow, and the Dow has been the one market that's been solid all along. So let's go right to the chart, and you can see while Monday was a sort of a Friday was a really bad day, we haven't done anything so far today. We're sort of just hanging in there. In fact, the Dow is up about it's about 40 points right now as we're speaking, and I think we could see this market just doodle around here. But the difference is here we are down and we're pretty heavily oversold, not unlike we saw back in this period right here. And here we are, very oversold. So we may have another leg up, or we may actually be turning down. We'll have to see, but the reality is the trend is still positive both on the monthly and the weekly. You have a plus 65, which is indicating a somewhat of a trading range, so we maybe just be grooving out here to actually go back up again. So we haven't seen a signal like we've seen on the NASDAQ or the S&P 500 that you should be out of the market. So maybe it's coming, but we'll have to be patient there. Now here's the S&P 500. As you can see, we made a new low below the previous low right here. That's not a good sign, but we are also very heavily oversold. You can see the numbers on the Williams percent are all the way down to here, this level right here, and also right here. So the question is this like a completed cycle? We're going to go back up from here like we did back here, which is another move up, or is it going to become even more oversold? Because markets can become overbought like right here for some time and stay in that mode for some time. So just because it's back here doesn't mean to say it's automatically a buy. But we have approached the midpoint of the Downturn trade channel, which is right here. You can see the line right here. So we're a little bit below that. We'll have to see if it comes back. But generally speaking, with the mixed results, you should be out of this market. You can see the results here, minus 70, indicating somewhat of a trading range. But you should be out with the weekly down and the monthly up. You should be out of this market right now. So let's go to our next market. Let's clear the screen. Next market is going to be pretty much the same picture. This is the NASDAQ. Of course, the Apple is down today. It's in court today. But don't forget, the World Developers Forum comes up on the 10th of this month. So in about a week's time, a week from today, they'll be starting in California and San Francisco at the Moscone Center to have the World Developers Forum for Apple. And they're expected to announce potentially some new breakthroughs, and that is maybe the catalyst we're going to see to push this market higher. Generally speaking, you've got a mixed results. Long term is down. See, long term is up, I should say. Short term is down. We expect this to reverse back and go up in favor of Apple. We need to see a little bit more momentum in this market on the upside. Maybe it's going to be that product, and let's see where we close today in this market. So moving on to our next market, that's the gold. Gold is putting in a very good performance here. Now this is what we see in gold that we are really kind of keen on. Now just remember, you've got a little bit of a negative here, 55, which means it's a trading range. But this low here and this low here, this comes out to be a 1350 on a close only basis. So this looks like a really important low period for gold. Now we've come up halfway. This is about a 50-60% retracement. Where we go from here is going to be very interesting. If we can take out these highs here, and that's around the 1420 level, then I think we've got something going on the upside. We'll be over a couple of moving averages, not the long-term 50-day moving average, but certainly a couple of the other ones. And our trade triangles will probably begin to turn, at least the weekly will begin to turn positive, but we're not there yet. So watch this market very carefully, in my opinion. So let's just clear that screen, go to our next market. This is crude oil. Crude oil is putting in another big performance. Now remember, we're coming from two areas that you want to pay attention to, in my opinion. And that is, number one, we're very oversold right here. Just like here, we're very oversold here in the market. Had a nice move up from, I'm going to make the $87 on the average up to 97. So it's a $10 rally. Now, remember, we're very oversold from a much higher level. We're oversold from, let's say, the 92 level. If we get a $10 rally from here, that takes us up to 102 on this market. But very oversold. You're back over the minus 80 line. We could see this market do a little bit better. Right now, you have to look at what we're seeing is all of our trade indicators right now are minus 100, saying the trend is down. And we have to be convinced this market's turned around before we get excited about it. Right now, you can see the moving averages here have just sort of begun to flatten out. It'll be interesting. So let's watch this market as we'll watch gold. We'll watch crude oil very carefully as well. So let's go to our next market. And the next market we're looking at is the euro. The euro, by the way, hit a 3-week high today, right when our signal is turned at 130.60. It's 130.89 last real time. We're right at the top of the downturn trade channel. I would say we're still in a very, very broad trading range, and I'll show you what I mean by that. It's very, very broad, and really you're looking at this period right here. Really, that's the trading range, and it's great if you're a trader. If you're not a trader, you probably want to be out of this market, at least for the short term. But there's a very strong day today. What's keeping the euro up is beyond me, but that's another story. You let the market tell its own story, and then follow that story in the marketplace. So let's go to our next market, and this is Apple. We've talked about Apple before. And we have a special video on that. You may want to take a look at it if you haven't seen it already. I think you'd find it interesting. But generally speaking, everything's flattened out here. I think everyone's waiting for the developers conference on a week from tomorrow, on the 10th, and we'll see. I think actually a week from today. That's the 10th. And I think we'll see this market going high, but everyone seems to think what we are also looking at in Apple, which I think is going to come to fruition, is this sort of mirror image where you're seeing the market kind of go sideways, and you're sort of creating this sort of potential head and shoulders. So we may go sideways for a while longer, but I think it's going to be resolved on the upside, and maybe it's a new product, maybe something else comes out of Apple. But I think a lot of people, very large hedge funds, are in this because they see just on a fundamental basis. I'm not a fundamental trader, but on a fundamental basis, it's looking pretty good. The other thing to look at here is the minus 60. That's a trading range, and I think that's what we've got right now, a trading range probably bounded by the highs we saw last week, around 57, 457. Oops, put a 5 in there, 457. And somewhere around the lows here. So I think that's really where we're sort of stuck in Apple for the moment. So let's clear the screen and go to our next market. Next market we're looking at, we've not talked about before. It's called SodaStream. They actually put soda in water. It's kind of a pretty popular thing right now. And this is new highs, new all-time highs for this stock. And we like new all-time highs. I would say if this market can close over the 68 level, 69, or even make a new high and close that way, I think this market has a good shot at going much higher. Now, this is the reason for that. We think this type of formation, and I'm just going to put this on the screen real quickly, this type of formation, this sort of sideways formation like here, is actually positive. And we say positive in the sense that it's had this sort of sideways action, and then we've just broken up in the upside. So potentially you could see, let's say we'll call this the 60 level to the 70 level, 66 level rather. I think we could see 72 to 75 pretty quickly in this market if we don't see a tremendous turnaround. Remember we talked about markets could be overbought for quite a while. Well, here's a good example of a market being overbought. So let's see how that plays out. SodaStream will probably be doing major report on this soon. So plus 100, strong trend, and that's the way you want to be long this stock. Hey, I'm Adam Hewison for Market Club with your Monday report for the 3rd of June. Have a great trading day, everyone. Thanks for watching this video. I hope you found it helpful.